So this is Euro-dollar analysis for, it would be Wednesday the 11th of October. So what have we seen the markets do today? Well, today on the 10th, we've seen the markets push higher. We've held the 1770 and we have been pushing higher towards the 1830 level. We did have a bit of consolidation around the 1770, which I expected, as we had over here on a few occasions. Market stalled, then sold off. So we're heading up towards the 1830. We've already had a rejection of this moving average here, which is currently colored in black. And where was that rejected? That was rejected around 1825. The actual level I've got a marked in the chart is 1830. So we're still in we could pretty clear from the visuals that we are in an uptrend here on the, let's just have a look here. Let's see where we are. Yep, so we are trading above the weekly pivot and by a sizable amount. We're heading up towards 1830. As prices currently stand, I do expect prices to test the 1830 unless we sell off from where it is rejected from this moving average. We could go into a bull flag and then break to the upside. Now, so if we go up to 1830, if we break above 1830 and retest and hold from above, I would expect then after which prices to head towards the 1910 level. That does seem quite a bit away, but there does appear to be a yes. If you look at this chart at the moment, it does look like a reversal is afoot in prices. So a test of 1910, I suppose, cannot be ruled out. We just have to successfully navigate these moving averages here. After 1910, it's quite a bit away. We'll be looking around that 1930 level where we have a bit of a little gap here. Not much. The gap was, yeah, you could say that gap was filled. But just to see how price is reacting around there. But 1910 is the level. So we have to, what we would like to see, just to conclude here, is 1830. Prices break above it, retest from above, and continue to 1910. Now, if we do break down from this moving average, or we do break down from 1830, the next level is going to be, the next major level is going to be around that 1770, to see if we do break down, get a bounce, and retest 1830 and move on to 1910. If we're not able to hold 1770, the next obvious level is going to be around that 1730 level, so 1728 as marked out here in blue, and 1710. Now let's have a look at the higher time frames just to see if there's anything of note that we can take into account. So let's just have a look. And we are currently trading around 1810 and 11, 23, 1. So currently, if you do have a look at this monthly chart, you'd still say we're in a bullish territory. We are in and around that 50 period moving average at present. That's sitting at around 118.30. No, 118.13. That's the 50 period moving average on the monthly time frame. We currently trade in and around that at the moment, as we're around 1810. And yeah, let's go down to the time frame below, the weekly. See what we can see here. So on a weekly time frame, we did come up to near 121, and we've sold back down, but the price action hasn't been exceedingly bearish. We've had wicks to the downside, suggesting there are buyers in this market. We haven't had large candles closing near the lows, so we might possibly could interpret this as being bullish, and we're in what would likely be a retracement before a continuation to the upside. So on this weekly time frame, as we can see, this blue moving average here represents a 200 period moving average. We are trading above it. We've seen a couple of reactions, most recently in the past 3 weeks. We have breached it, but we've been bought back up when we have breached it. So currently this week we are in bullish territory. Let's just see where the 200 period moving average is in relation to this week. So 200 period moving average is at 117. So we've got the level at 117.10, and we've got the 200 period moving average at 117. So 117 is going to be a very important level if we do see a sell-off, even though I am expecting a continuation for a test of 1910. So on the daily time frame, I've mentioned this level in a previous video, but I'll mention it again. We see a bit of consolidation here in August, where prices made attempts to sell off, but were bought back up, and we subsequently saw a break to the upside and a breach of the 120 level, and we almost breached 121. Now we've sold off, come all the way back down to this level at around 117, 117.10, and we have seen some buying come into the market. We had 2 consecutive days of buying, and this third consecutive day, which was Tuesday the 10th of October, we've got in the context of the previous candles, a pretty sizable candle. Not an engulfing candle by any stretch, but it's pretty sizable in comparison to the previous days, and we have seen it close near its highs, even though we are just below an area of possible resistance. We have seen we've seen it push up. Now above it on this daily time frame, we do have the 50. We do have the, what is that? It's the 50 and the 20 period moving average, 1834 and 1845. So we just might go into 1834 and 1845. So those line perfectly up with the horizontal resistance at 1830 that was put on the charts from several weeks ago. So 1834 and 1835, that's going to be within that zone of 1830. So we might see quite a bit of consolidation in and around this level. I might see a brief sell-off. May not go all the way down to 1770, and we'll see would take some momentum and for it to break the 20 and the 50 period moving average, which lie so closely together above for a test of 1910. So that should wrap up my analysis on euro dollar. Before I go, LCS, like, comment, subscribe. Thanks for watching.